Welcome back to another episode of the Pure Property Podcast. So we're joined with a very special guest today. So we've got John from Magna Partners. Thanks for joining us.
Pleasure. Thanks for having me, Tobi.
No, it's great to have you on. So for the listeners out there, we will give a full introduction to John. But so John owns a company, the same as myself and what Matt works at, Track Capital. So in the same industry, same field, selling property investments, sourcing the best deals and opportunities for our clients and introducing them to excellent return on investment properties. And yeah, so it's good to have him on because in our industry, it's quite small. We all kind of know each other, but we all operate differently. We have different strategies, and it's good to have John on today, see how he's finding the market. And more specifically, the episode's going to be looking at about how we're navigating the property market at the moment. As we all know, the Labour government's come in. There's a lot of changes on the horizon. We have a lot of clients that we are speaking to that are obviously in the process of buying property or maybe already have a portfolio and reassessing their portfolio to potentially add to that. And yeah, with the state of the economy and politics, that's a big factor within that. So we'll get an idea on how John's finding things, across the board, how we're all finding it at the moment, what we perceive potentially the market to do going forward with Labour coming in, whether that's good or bad. Well, I'm sure we'll discuss that. But before we go into that, more importantly, we will get a good introduction to John. So, John, why don't you start by telling a bit about yourself and also your journey into the property investment industry?
Sure. So, John Halaka, Magna Partners, founded the business 4 years ago. And my background, I felt, is very similar to most, in fact, probably yours.
Yeah.
Surprisingly, last year I spoke to you and I think we crossed paths with a similar employer, which is quite a weird moment. But I was exposed to property through parents. I took an interest at a very young age, and then found myself just sort of gravitating towards the idea of the sales side of the business, the investment side, and more the negotiation as well. That really drew me in. I like the idea of seeing something from the beginning and transacting and all the in-betweens.
Yeah.
Worked for some really good companies and built my craft in understanding how the industry works from all elements. And I was fortunate enough to say I had a few mentors along the way, one being my dad and then a few being really unique individuals in the industry who practiced what they preached. I think that really helped. And then felt that 4 years ago, like most, you get to a point where you start pointing the finger and realize that actually, could I do this myself? Is this something that I could potentially do a little bit differently? And then that was where Magna Partners was born. For us, we never in a million years did I think I'd be sitting here on a podcast with you. But last year we had you on, Tobi. And do you know what it says? It really says a lot about the sort of culture that we have as businesses, in that we don't necessarily view, I don't necessarily view you as a competitor. I look at your business and I think I can learn from you guys. You're doing something good. And I think there's so much to learn from other operators within the industry. Yes, because it's small, but also because clients will gravitate towards different people. There's enough business out there. But Magna Partners is a residential investment agency that specialises with a unique focus on new build and off-plan investments. More so, less so the transaction side of things, be it just get something and flog it. That would make our lives probably a little bit easier. Honestly, it would shorten the process. But what we'd rather do is consult, advise, guide, and actually then present options that really suit investors for the long term. Because what I've always found through family business experiences, you do right by somebody. It might be the harder way up, but it'll always come back round. And we found that, we don't charge our investors any upfront costs. For us, we understand that if we do the right thing from the outset, it will come back multiple fold. So, I'm sure we'll get into some more crossovers throughout the podcast, but just a little bit of background as to who I am.
No, I love that. I mean, obviously we've known each other in this industry, so it's obviously since you started as well. And I think the one thing I've always respected and always when speaking to people about yourselves is just, how you operate. Like I mentioned at the beginning, this industry is fairly small to a degree. We kind of know all the main players. We know most of the business that operate, but you know, I always try and gravitate to the ones who, you know, really shows a bit of reflection on sort of how we operate, you know, our ethos and how we like to do things. And again, coming across yourself, we speak to clients that have come into contact with Magna, bought through Magna, and we always get such positive things. And it's a really, really big thing in this industry because buying property is not an easy transaction, and there are sometimes things that can go wrong, especially if you're working with the wrong company. So having companies like you within the industry, or, you know, crossing paths with even clients that we may speak to in the future, it just shines it in a much better light. So I really like that. I like how you operate, how you deal with your clients. So yeah, absolutely love.
I appreciate that, Toby. And you know, just on that, you're right in that in the industry, I think so often it's brushed over that it's all good. I think we're one of few that will actually tell investors, no, there is bad. There are risks, there are bumps. And I think you need to highlight those bumps in that, you know, when you're dealing with new build and off plan, there will be delays. You know, there might be down valuations. There are situations where you might not necessarily get the rent that you're asking for. There are so many other pitfalls here, but the other side of it is there are also benefits to what we do. But ultimately it's a business, and in any business it's never plain sailing. I think that's what people have to appreciate in today's market, in our industry, that it's become a lot more professionalized. People really can't just sort of buy something and hope for the best. They've got to have a real structure, a real plan, and a real intent to actually grow something, because the likelihood of someone making a fortune or life-changing money on the first deal is a thing of the past. I think you've got to have that consistency.
No, I agree. I always say that to clients, you know, that are adamant they want to go down the secondary market route, and I say the same. Say, look, the risk and pitfalls we have within our part of, you know, the new build off plan side, you'll have very similar ones in that they may not be exactly the same, but similar. You still have down values. You'll have mortgage valuations coming out saying the property needs this work, or, you know, they won't lend on it, or a property will fall through because the chain breaks down, etc. So, but the only difference is within our industry, those are a lot smaller and shorter in terms of time and money consumption, but also we're there to actually assist and help you through that process. You know, we're guiding you through that. You know, an estate agent won't do what we do. They won't go to the lengths we go. They won't, it sounds bad because I used to be one, but they won't have the expertise and realistic that we have, you know, the vested interest in that. They just move on to the next one. So yeah, I'm sure we could go on for ages now, but just lastly then, so what would you say was your main inspiration to start Magna Partners then?
Culture, environment. You know, we're not gonna change the industry. You know, I think it's so naive when people come into it and think it's good to have that intent, but it's naive to assume that you're just going to sort of change the way property works. Property is sort of written in laws of hundreds of years, and, you know, people complain about the conveyancing and making it electronic. It's not that easy, but I think we can make small changes along the way. And the first thing is not overselling a product. You know, I've been blessed to actually have had some really good results from property that has impacted my life personally and people that I know. So why wouldn't I want to then present that to other investors in a way that's conclusive and genuine? So I think, for me, it was a case of building a culture and a community within Magna Partners that really just said it how it was. And not sort of jump out of our lane. It's so easy to get distracted by the noise. I was speaking to, on our podcast, we've had a few guests from multiple different industries, and you kind of sit there sometimes and think, am I doing the wrong thing? You know, am I in the wrong business? And it does make you question that. And I think I always go back and leave and think, no, the grass always does seem greener on the other side. But a lot of the times when you're doing some of the things that these people are doing, you have to sort of remind yourself, I wasn't happy during that point. That's it's all well and good talking about the highs, which everyone does, but rarely does anyone talk about the lows. So
share the positive light on their side, right?
Exactly. So that for me, that was more why Magna Partners had to be formed, and we're taking our own pace. We're not trying to be the biggest in the industry. We want to be the most precise, and the most efficient.
Love that quality.
I was just going to say it's really refreshing to hear that as well from John, because similar to what you said, Toby, I've also had clients that we've obviously, as we know, it's a small industry, so we've come across each other, and clients have dealt with yourselves, and something that I, obviously being on the front line, I would say is the fact that we always get really good feedback, as you mentioned, Toby, and also people liking what you guys are putting out there content-wise, which is, I think, really important in today's day and age with social media and the power of it. I think I've also watched a couple of your vlogs, John, which I'm a big fan of, by the way.
Appreciate that.
I think it's good. I don't know if you've stopped it, but I think you should carry on doing it because it gives a real, I think, raw insight of what it takes and what it looks like, and putting your face on the front line and showing people the truth and realities of property. As you said, it's not always plain sailing. There's a lot more elements to it, but I
appreciate that. Keep it coming.
I was about to say,
I'm loving it. No, but honestly, it's really nice.
His head can't get out of the door.
Yeah. Whose side are you on as well?
No, honestly, it's refreshing though, because we know there's a lot of people in the industry that are not always playing it and doing the right things, I would say. So it's really nice to see.
It's finding that balance as well. I think there's a balance between social media and reality.
Yeah, absolutely.
What we put out there is as accurate as it is. Yeah. But at the same time, we've kind of sort of taken a step back because there is a lot of emphasis on the business. There are clients. There's money that's at stake here.
It's time consuming as well, right?
It is. Yeah. So no, I'll take that as a we want more, and I'll do some more.
We do.
Appreciate that. Thanks,
definitely. No, that's good. Right, moving on then. So, look, we're all in the industry, we're all navigating it as we know at the moment. We had the general election recently. I mean, not that we'll talk about it today, but we've got the the budget coming up as well, which will be a big factor, which we know a lot of our investors are going to be sort of looking out for. But the main thing that we've spoken about recently on a podcast, which we see a lot spoken about, it'd be great to get your view on, is the renters reform bill, because we get clients past and new mentioning this, like, oh, am I going to struggle now as a landlord, or all my rights gone? But from your point of view, like, how do you think the renters reform bill, if it will at all, reshape or shape the investment property market?
I think regulation, legislation is good. I think tightening the belt here and there is good. But I think a lot of the times renters reform bills or tax changes or regulations, they're always heightened to be worse than they probably are. When you talk about these things, for example, I'll give you an example, a personal one. So I've owned a property for almost a decade. Okay, and that rent reviews should be a thing which are conducted yearly. But the reality is I've never conducted it once over that decade. Call me stupid. But when you're in it and you're dealing with people who look after your property, people, right? They're not a tenant. They're not just this item that you just place there, and they make that their home. They build roots around that property. So the point I'm making is that the theory of it sounds always that you should do X, Y, Z, but the reality is always different. And I go back to the renters reform bill, is that the theory of it will typically sound a lot worse than it might be. But the reality is the market will continue to flow and grow and build wealth that people have been building. So, for instance, there's some rules that have come out, which is you won't be able to serve notice within the first year, and then you have to give 4 months notice instead of 2 months notice. Why is that a bad thing? Fair enough. Someone's built there, they've decided to move into a property. Obviously, unless the caveat is unless they're of course not paying the rents, which is then the issue.
But then you'd have a different way to get them out if that was the case as well.
Exactly. So I think, look, I tend to come across as not necessarily on purpose blasé about these situations, but I don't get sucked into it too much, because I think unless it and until it happens, then react. Similar to the budget, when you look at the budget, there's so much noise about at the time of the recording, the budget hasn't happened yet. It's due to happen next week. But it's all hypotheticals. And everything that we've heard so far is just a rumor, but people are talking like it's gospel, like it's happened. So it hasn't. So let's react when it has happened. Let's plan accordingly when it has happened. And I think when you look at it, the only thing that I've seen that could impact the property market, which I'm sure we'll get into, Toby, is CGT, stamp duty. Is there anything else? CGT, stamp. There's potential reform of council tax, but
probably they're the main ones in terms from an investor point of view. I would say the main ones.
But when you look at our business model, certainly ours is retention of assets, longevity. So it doesn't really fall into the idea of disposing of assets, which kind of protects us for the time being.
I agree, because you were mentioning, was it today or yesterday we were talking about the renters reform bill, and even you were like, look, it's not even that bad.
Yeah, when you look into it, it's something that investors, as you said, John, correctly so, it's always seen as such a scary thing. And I even get people sometimes, I'm sure you have it if you're directly still chatting to investors, but some people are going, I want to wait and see what's happening. And I've heard loads of landlords are exiting the market and it's not a good investment anymore. I should be looking at other options. But as you said, when you really look into it, there's actually other elements to different sections that are there in place. And as you said, these guys are human beings. They're not just tenants. They're actual people that if you have, I think, somewhat a good heart in a way, that naturally you want to take care of your tenants. And at the end of the day, yes, you want to put them in a good home. And if anything, I think it pushes out the landlords that are kind of neglecting things rather than kind of taking actual care of what should be the case. And I think, to be fair, that we always get that turnover, don't we, of new landlords coming into the market and a load of people exiting as well. So I think it'll be interesting to see what happens. But I think, as you said, it's something that I think is built up to be a lot worse. But when you actually look into the other elements of different sections that are in place, you can still obviously evict people if they're not paying their rent, etc. Of course, it might be a little bit more long-winded, and then also if you're selling the property, there's still elements to be able to get them out on different other sections as well. So yeah, for me, it's not scaring me out of the market.
Didn't you hear about this exodus?
Yeah,
at Brexit,
it's always
didn't you hear about COVID, tax changes, Section 24, whatever it is? There's always an exodus of landlords, and I think you're right in the sense of all it's doing is it's just flushing out the unwanted and really replenishing what we've got and making it a better market. It needs adaptation. It needs to be adapted as we go along, and I don't see that as a bad thing.
No, I think the crux of what I get fed back from investors or people talking about the renters reform bills, I lose the right to get my property back, and I literally just stop them dead there and I say, look, to simplify it for you as best I can, all they're taking away is the right to turn around and say to the tenant, I want you to leave, but there's no reason behind it. That's all they're taking away. So as long as you have a reason, you're still able to get your property back. Like we said, if you want to sell the property, you can get the property back. You're able to give the tenant notice. If they're not paying, if there's antisocial behaviour, for a number of reasons, but there just has to be a reason. All they're taking away, which everybody seems to focus on, is you can't just rock up and be like, I feel like getting my property back tomorrow, so here you go, I want you to leave. And that's really, there's lots of other things in there, of course, but that's the stigma that I'm getting back from people. They think they're losing power, and I'm like, no. And again, when they're talking about you can't discriminate against people with pets. Well, yeah, that doesn't mean you have to have someone with a pet. It just means you have to be open to taking them. Yeah. And people on sort of benefits, for example. It's not saying that you have to take them. It just means you can't discriminate against them, which is right. You should consider everybody. But if you've got 4 tenants there and 3 of them are working in high paid jobs and maybe one's on benefits and haven't got as much income as the others, then of course, as a landlord, you might say, well, look, from my point of view, I just want security. So
you're still allowed to choose.
You're allowed to choose pretty much. It's just, you just can't say I'm not dealing with them, which landlords used to do, which is completely wrong. So that's the thing. But yeah, I agree on that. I think points made there is correct, and I think you touched on the tax point of view, so we'll come on to that then. Again, this is speculation, as we know, but what do you think the potential implications of that could be? Capital gains tax being probably the main one, I'd say. But yeah, what do you think in terms of tax wise then?
So of course, if capital gains tax does increase from the threshold that it's at the moment, then it will impact people negatively. Clearly, right? I think, again, these are just my thoughts, but this is more of a wish list rather than. But you kind of hope the government wants to encourage investors. They want to see people that they might class them as those with the broadest shoulders, and not the working people, right? I think I saw it today. It's like working people aren't ones with assets, so we're in a separate category, right? But you kind of hope that the government would see, like, over the past 5 years, for example, the average property price has grown by 20% across the market.
Yeah.
Right? Great. Like you look at it as like 5%
Yeah.
or 4% per year. That's amazing. But then you factor in inflation.
Yeah.
Inflation has grown by something like 30%, 31% over the past 5 years. So you're actually in negative when you look at it in real terms. So when you come to sell a property,
Yeah.
you're not actually profiting. You've kind of lost in real terms. So my hope and wish is that they bring back this indexation relief, which factors in inflation, which makes it a lot fairer. Because I think, correct me if I'm wrong, but I saw somewhere that capital gains was a lot higher years ago, something like 40 or between 60%, something crazy.
Yeah.
But there was indexation relief, which made it fairer.
Counteracts it.
Exactly.
Yeah.
So again, I think the market adapts. In truth, you find a way. It's you either do or you die.
Yeah.
And so no one's going to sit there and say, "Okay, well, we're not investing anymore."
Yeah.
And I think the case in point is that when you look at most corporations at the moment, it's almost like these conspiracy theorists come out, and every now and then they make these good points, right?
Yeah.
But there's a lot of noise here with retail investors saying, "Oh, there's an exodus. Landlords are going to stop buying. There's no more money in buy-to-lets."
Yeah.
But then why are huge banks and corporations buying properties and becoming private landlords? So you look at Lloyds; they're the largest lender in the UK.
Yeah.
But they're also set to own 50,000 properties by 2030. Legal & General are following suit. John Lewis are following suit. Why are they doing that?
Yeah.
Well, they clearly know something more than
No
I do.
money in it, John. So.
Yeah, exactly. So again, you kind of look at it and think, okay, you need to adapt. So here are the rules that are going to be set on the 30th of October. When they come into fruition, nobody knows whether it's immediate effect or whether it's in April 2025. But whatever they are, you navigate, you pivot, right?
Exactly. I always say you can invest in any market. It's just how you invest. That's the main thing. That's
Agreed.
why adapting strategies or moving to different locations it is key. You have to be fluid. Move where the money is and do the strategy in the same way as well.
In property and in business as well, right?
Yeah,
you have to be able to pivot, I think, in general. I think as well, there's also elements as well that can maybe counteract that, as we said, with maybe going down the route of whether you're buying in a personal name or if you're buying in a business as well, which can obviously offset some of those costs as well. But I think it's obviously always the individual. It's best to look into things if you're looking to grow a portfolio or just purchase maybe one property. I think it comes down to the individual, but it's good to maybe have a chat with an accountant and so on before you maybe look into some of these things. Yeah,
I've got a feeling, I mean, I could be wrong again, it's all speculation, but I'm hoping the autumn budget isn't going to be as bad as they all make out. I think they are actually, I personally think they're going to go more after businesses and corporations rather than actual individuals. Just for multiple reasons, but I think I was talking to you about this as well, because separate from property. But the reason I think that is when you look at the economy, I think one of the problems maybe we've had over the years is where the individuals have been taxed, like, the normal people, the working people. What that stops is where they're getting taxed, that stops money going into the economy. Whereas in the companies, and it pains me to say this because obviously we own companies, so this is horrible if they do this, but what companies do is they hold on to profits and they hold on to assets and don't release much back into the economy. So from what I've been reading, and I could be wrong, they could be doing the complete opposite, but I think Labour's mentality is, well, actually, to get more money in the economy, we need the people to not be taxed as high, get the businesses to maybe burden a bit of that.
But without those the counters, without those businesses.
Exactly, it's such a counteractive. But this is interesting. It is the economy, and we could go on for ages. But I don't think it's going to be as bad for the individuals. But let's see. And like you said though, but what happens. Then you just navigate around it. You can always maneuver. You just have to be clever and just really strategize and focus on it. Coming on to that sort of next point in terms of changes on that side, one of the ones they have announced, and I don't know if you get this a lot as well, is the new EPC regulations by 2030, having the minimum standards. So this is one of the conversation we have, and especially the team, I'm saying, look, you'll probably have this with clients. Like, we're quite lucky because we operate in the field of new builds and off plan, so their EPCs are actually going to be fine. One of the main benefits, our clients aren't going to have to spend thousands of pounds. I think it's about £6,000 to £8,000 the average a landlord with an older property is going to have to spend. What do you think that will potentially do to the market, or have you had any experience with clients who are worrying about this?
I think good.
Yeah,
I think it's a good thing. Genuinely, the circle that I'm in, there are obviously landlords.
Yeah.
And the state of some of their properties, I'm not going to name and shame.
Yeah.
But it's abysmal, right?
Yeah.
It's not just owning a property and saying I own that property. Look after the property.
Yeah.
Because ultimately, it kind of sort of defeats the whole point. You don't just want to own property. You want to own property that's competitive, that's going to grow in value, that's going to compete on the rental spectrum as well. You neglecting a property is only going to harm your own pocket in the long run. Yeah. So I think good. Some landlords just leave the property and just and it's the tenant's fault. It's a bad tenant who doesn't look after the property. And from my side of things, I think it's a good thing. I think that type of statement actually again cleanses the market. Because there's a lot of wannabe landlords that are giving landlords a bad name. Look at most of the talk at the moment is about negativity. Landlords this, there are a lot of good landlords out there.
Always getting stick.
They are, but there are a lot of people that are saving their hard-earned money, trying to build a pension, build an income for themselves, and in return, they're supplying property on the market in many locations that people can't afford to buy property in the first place. So. Yeah, I don't see that as a bad thing. I see that as a positive.
So, I mean, again,
same thing that we agree with, I think.
Yeah,
from when we last spoke, I think I've had a good couple of conversations with investors who are maybe weighing up the options of new build and also your secondary market properties. And if anything, I think actually puts us in better stead in terms of with the new kind of, especially if you're a lot of the investors that we deal with, I'm sure you're similar, John, want to be kind of hands off, not have to do too much, and obviously benefit, as you said, from the capital growth, the rental side of things. So for us, I think if anything, pushes people to kind of, as you said, it's a good thing in terms of the EPC, because these older landlords are now going to have to get that property up to that certain standard, which is going to eat into their profits and it is going to be a cost for them. So if you can get into the new build market at this stage, it's something that's a cost that you haven't got to worry about when that time comes. It's already energy efficient. Obviously, you've got the 10-year build warranties on a lot of the new builds. So I think it for our world that we're in, it works really well. But I think obviously there's always going to be a secondary market and there's loads of properties. So it'll be interesting to see how that actually plays out by that time comes, because there's been things of maybe you might get fined if a property's not up to that standard by a certain time frame. So it'll be interesting to see how it plays out.
I think that if it's averaging £6,000 to £8,000, again, if you are a landlord who's in this for the long run as well, spread that over the period where you'd be owning the property and you factor in the capital growth and the rental returns, you're going to absolutely swallow that up like it's nothing. So I don't think it's an issue. I think it's, like you said, it's good to get these properties up to a standard where the tenants are going to benefit from it. And also, like you said, be competitive in terms of you as a landlord. Like, if you're trying to attract tenants, have the sort of biggest eyes on your property when you come to let it back out, tenants are going to be conscious about being energy efficient. They're the one paying the bills at the end of the day, and the better you maintain it over the long run as well, it's going to save you money.
Exactly. See, if you scrimp on costs now, but you eventually have to pay them, or you do the smart thing, which is spread the load along the way. And I think it no longer is a choice, EPC or not. I think it's a requirement. I think when you look at Gen Z and their tastes and requirements, when you look at buildings now that offer mere basic level specification, it's just not good enough. It's not going to draw in the right crowd or the premium rents that you want. I mean, you want facilities, you want high specification, you want these juice bars in the lobby, all these things. But again, this is ultimately because we're sort of navigating towards an environment and an era where, because there is affordability issues, people want to see that where they do live, they're getting really good service, they're getting really good value.
And I agree. And I think just last thing on the EPC side, and I forgot to mention this when we've spoken about it, but you have to remember, they want it to be a minimum of a C. At this moment in time, if you are an investor and you're buying a buy-to-let property with a mortgage, that lender wants it to be a minimum of a D anyway. They won't lend on a property unless it's a D. So
That's true.
you've only got to go up to a C, which shouldn't cost
should be massive,
too
really,
much.
yeah.
But yeah, it'd be interesting. But yeah, we're seeing definitely more people now interested in the new build and the newer property route because it's all done for you. And we can see where that's going. People want energy efficient homes. They want their homes to be cheaper to run. Again, affordability levels. And like you said, we're seeing a shift, and maybe for the long term, in terms of the future, the mentality now of, you know, the demographics or the next generation coming up, they're going to be actually probably well adversed and used to renting. They may not have the appetite as probably our generation did to go on and buy, because they think they like flexibility.
Shift, doesn't it?
Yeah.
In terms of, I remember even, I think I was probably told as a youngster always to get on the property ladder, buy a property, own a property straight away, where I think generally, as you said, like the whole Gen Z thing, people generally are seeing as well, and you see it on social media as well, like, oh, you've got the freedom when you rent, you can kind of do this and that, and I actually do get it to an extent. I'm on a similar path even myself. I'm like, actually, the freedom and flexibility that you have when you rent is quite nice, which is going to be even better for landlords moving forward if we know. But as we know, they've always had schemes in place to try and get people on the property ladder. But I generally think, as you guys have said, it's actually shifting without kind of without kind of the government, I think, have not always fully understood that people actually want to buy no more, and all the costs and the hassle that comes with it. So yeah, interesting.
Do you think Labour will introduce rental caps?
God knows what they're going to introduce.
Because we've seen this happen in like Wales. Obviously, we've seen it take place in Scotland previously. And I know one of Labour's, they haven't put it in their manifesto as far as I'm aware, but it's something they've always sort of hinted towards.
Yeah.
But yeah, do you think that's something that they will bring in?
Again, they've made no hint of them introducing something of this nature. Naturally, being on the side of the fence that we're at, we'd look at it and think, that's crazy. Why would you do that?
Yeah.
And they've introduced, or they will be introducing, something which is you're only allowed to review the rent yearly after the first year.
Yeah.
And it has to be at market level.
Yeah.
Right? So again, that's fair, because you know, you look at the other side as, okay, well, here's the market rate, or offers up to this level, and if it meets that level, great. But capping it, again, I don't think so. I think that would really sort of suppress the market and just put investors off to a level where they need. Property is a huge part of the economy. Yeah, you know, there's only so much that these investors are willing to take with their hard-earned money before they think, okay, well, I'm going to navigate in a different way or take in a different route. So you've got to be careful the pressure that you apply here. Well, I don't know. I don't think so personally. It's not the country that I believe we are in sort of capping potential, capping success and earnings. I don't see it.
Well, I know it hasn't gone down well in Wales and Scotland from what I understand, but yeah, it was just saying that I haven't really thought about it much lately, but you know, they are talking about, you know, affordable housing and, you know, making it a fairer marketplace in general. And it's just one of those things I don't, whether it's, not saying that I think they'll do now, but maybe later on down the line. I hope not, because as you said, I don't think it benefits. And I always say, and I'm a big believer, the rental market actually dictates itself. We don't as landlords, because it will only go up to the price that the tenants are willing to pay. So all the while they're able to afford it, that's where the rents will be. Otherwise, they would obviously spiral out of control.
That's right.
So I do agree there. But then on the case of, you know, Labour wanting more sort of affordable social housing and stuff sort of to bring in to help people within the housing market. Do you think that, I mean, we know it's a positive to have it, but when we look at the quality of property that we're producing at the moment, you know, in the city centres, do we think if they do push a focus on that, do you think that might bring the quality down a bit?
Again, everything is priced accordingly.
Yeah.
So if anything, if quality is low, then all that will happen is people that are willing to pay for quality will opt for something else. Yeah. You know, again, you're absolutely right, is that you can set a price on something, you can ask for a price, whether someone's willing to pay that or not is a different story. Yeah. So really, we control very little. in that regards. All we can look at is the positive is, yes, they want to introduce more supply into the market, but the demand will always outstrip the supply.
Yeah.
Simple, right? No matter what they come out and say. I think the only thing that we do know about this Labour government is that they want to fulfil 1.5 million new homes within the next 5 years.
They've actually upped it, haven't they?
Right?
The quota.
Oh, fine, okay.
Yeah.
But 300,000, a minimum of 300,000
Yeah.
new properties every single year for the next 5 years. I mean, no one's going to say no. We don't want that, but. I go into power. I go into number 10 tomorrow and say, all right, we're going to build 5 million new homes. It's like it's a number out of thin air.
Yeah.
The closest we got to it was when it was 2022, 2023, 234,000 new homes in a single year. That was the closest we've ever got to this £300,000 figure. So how they're going to do that, where they're going to do that, I don't know. Yeah. The economists are saying they don't know either. When you look at the land scarcity, where they're going to build these properties. Yeah. So all of a sudden people are just going to sort of start commuting into these remote places in the middle of Timbuktu. It doesn't make sense. So again, I think this is a good thing in the sense of, yes, we want to encourage new supply. We want to see ownership of property. Yeah. But again, you have to play by the rules that are there, that, you can't cut corners. Yeah. If you're going to provide properties and supply properties in the market, they've got to be good quality. Yeah. And then they'll be priced accordingly.
I agree. So, put you on a spot. Who would you have preferred to go into this next term of government? Would you have been Conservative or Labour? Like, not from a political in terms of who you support.
Trying to bring my business down.
But no, looking at Labour coming in now, the reason I ask is because, look, we've had Labour come in and we can see what they're trying to do. So, and we know what Conservatives were doing. So I'm not saying like who you support politically in that way, but in terms of how they're operating, we've got a glimpse of what Labour are doing. So looking at what they've come in and they're speaking about, your mind could change after the autumn budget, of course. But as it stands at the moment, you saw what Conservatives did, how that affected the property market. We can see what Labour are doing. Do you think you're actually, Labour are fine to go, or was actually looking at what Labour's doing, I would have preferred Conservatives to be there? What would you think?
I'm 34, right? So I was born in 1990.
Making me feel old now.
Yeah, are you older than me?
Yeah.
Sorry. So I'm 34 years of age, and I've only known, I've not known, but in my life, Labour has only served once previously. Yeah. So I don't know anything different other than Conservatives. Yeah. And one of my biggest pet peeves is speculation. Yeah. And people sort of dismissing things before evidence and data. Yeah. We hear it all the time. When you're speaking to investors, they make these wild speculations where, they point the finger as if it's fact, but actually they're so distant from what they're talking about. So I don't want to do that. And at the moment, I think Labour are in government. Yep. They're going to give it a go. Whether it works or it doesn't, we don't know. Yeah. But we can't really comment because all we've had for the majority of my life anyway is Conservatives that have done certain things. Yeah. Some good, some not so good. Yeah. And Labour, who knows? So it's a tough one. It's a tough one. I'm all up for change. Yeah. I'm all up for change. I think change is a good thing. And I'm not going to sit in my room and cry if these rates go up or those rates go down. I think there's opportunity always. Yeah. You only know it was a recession once the recession is done. Yeah. Everyone's always like, I'm going to do this, but the time's passed now. Yeah. And again, you look at it, it is hard times at the moment where you're hearing more negative than positive. Isn't that a telling thing? Yeah. Isn't that actually a good thing for investors? Yeah. The worst time to invest is when everyone else is investing.
Yeah, exactly that.
So that's my feeling towards it.
What about you, Matt? I'll throw you under the bus quickly.
We need to throw you under the bus as well.
Yeah, please turn it back on this guy.
You want to turn it on to me?
No, to be fair, to be fair, similar to what John said, I've only really ever known Conservative, and I think you can't really judge Labour until things have gone on a little bit longer than they have. That's right. Yeah. I mean, there's a lot, as we said, there's a lot of changes and things that some people are throwing out and saying it's crazy and people want to get them out straight away. But as you said, John, I think we haven't seen enough yet to really make a full over and summarise basically what they've done. So I think it's a wait and see. But I think the perfect question. Let's turn it back to him.
No, I'll take it. So if you'd have asked me before the general election, I would have said, "Oh no, look, I think Labour are going to be terrible for the property market." From what they were saying, again, my previous experience, a little bit older than you, but I did study politics at school many years ago. Yeah, a long time ago.
It's a podcast exclusive.
Yeah. So I would have said no. I think that they're probably going to do a worse job than Conservatives in terms of the property market aspect. But that said, with Labour coming in and the stance they're actually taking has surprised me a bit. So I would actually say, as it stands at the moment, again, we'll see what they do, but I think they'll be fine in terms of in general. But again, the property market wise, as long as they don't go too far in stepping on landlords, which they're not making the noises that they're going to do, I think it should be okay. So I would say at this moment in time, I'd be happy with Labour as they are.
Fair enough.
Again,
it's conclusive.
Yeah, there you go. See, I didn't sort of skirt around it. I went straight in. So
I mean, John didn't actually answer the question. We just said, let's see how things play out.
Yeah, exactly. But so what would you? Again? I know you don't like speculating, but where we're at the moment, autumn budget aside, because that could change things, but how things are going at the moment within the property market, how do you see the next 12 months potentially playing out in the property market?
I think positive.
Yeah.
And we can only go on previous data, right? When you look at inflation at the time of recording is 1.7%.
Yeah.
The market average has grown over the past 6 months consistently.
Yeah.
The base rate is almost dead cert to drop by 0.25% in November, and then a further drop in December.
Yeah.
These are all positives.
Yeah.
So, how I look at it, I think it's actually from where we've come from with the absolute hurricane that we've all been through, from uncertainty, rates going through the roof and people just not knowing what was actually going on, to a bit of stability. Yeah. And I think which is very welcomed.
Yeah, no, I agree. No,
I think the exact same. I think as well with some of the kind of forecasts that have come out as well from Savills and JLL and stuff like that. I think it's a very positive time to be looking into the property
market. And they in fact revised their forecast.
And improved as well, didn't they? So I think if you're looking into it, as you said, John, you've got the rates hopefully dropping in terms of mortgage-wise, as well as looking at the capital growth element, which looks strong across the whole of the country, actually, positively. Yeah. Especially certain regions looks like they're going to perform really well with a lot of aggressive growth taking place. I think, for me anyway, I think it's going to be a positive 12 months. What about yourself?
Yeah, same. I see it as a steady market. I keep saying to people, I like this market. We all like, big growth and aggressive markets, of course, but they aren't predictable because you don't know when it's going to tail off. You don't know, is there a catalyst which is making that happen, which is suddenly going to change and drop out. But what we have at the moment is a nice, steady, stable, normal property market. And I like normal, I like stable, I like steady because it's easier to predict and easier to forecast. So when you are going in and investing, it's a much steadier landscape. So as an investor, you can have a bit more faith when investing at this point. You can see the stability, and if you're investing in this market and can make money, I think, and again, if you've invested over probably the last 2 years and you're making money in your investment, you're going to do very well in the future because it's, in my opinion, only going to get better.
It's very, very true. Yeah. Something someone told me a long time ago is if you can make it through the rough terrain, you wait until it starts shining. So yeah, it makes sense.
I think this is as well why so many people, especially overseas as well, are so interested and want to get to know the UK market, which is really nice to see. We don't always hear of other countries and people rushing to invest there. We get such a big amount of investors who are from actually overseas as well that really
isn't that telling?
Exactly.
It's like, again, with all the negative press, but why are foreign investors, international investors investing more than they probably invested before? Do they know something we don't? As much as there are negatives in terms of the transaction times and it's quite archaic, it's dinosaur, granted, but that tells you something. It tells you that it's not the Wild West. There's some stability, there's some red tape, and you want that around your money.
That's one of the attractions, right? Because that's what a lot of overseas investors, if they don't know when they do find out, are very, very happy about is that we complain about the legal system for purchasing property and the conveyancing system in the UK. But like you just mentioned, it is robust. It is there to protect the individuals there. And that's one thing in a lot of overseas countries, unfortunately, they don't get. And I do think we take it for granted here in this country, for sure. Good. So before we wrap things up, back onto you as a bit of spotlight, John. So coming back onto your experience, and again, yourself at Magna Partners, what would say are some of the common misconceptions that newbie or new investors would have about property and property investment?
Most common misconceptions. I think the most common one that I would say draws back to the beginning of my career is always freehold versus leasehold.
Yep.
I think that's a huge misconception. You know, it's almost like when you hear it, it's like a matter of fact.
It's always a talking point as well, isn't it? It doesn't go. That question doesn't go away.
Exactly, but I think it derives from issues that people have had with leases, and there have been some stinky leases out there which have burned people. But flip side, there's always two sides to every coin. Is that there've been some fine leases, and leases are there, and service charges are there more prominently, to maintain the integrity and the value within the building. You know, it's something that you pay for as you go along rather than a freehold property. But the point of it is that the misconception, it's fine to have these views as long as you're open-minded to understand actually there's two sides. I believe a balanced portfolio should consist of both properties. I don't think it's just one. So that's a misconception. We can go into that in more detail, I'm sure, on many different occasions. Another one could be that new build versus second hand. There's one better than the other. This strategy is better than that strategy. There isn't. You know, and I think whoever you speak to, they have their agenda. My agenda today and forever will be new build and off-plan investments. That's my agenda. However, I'm not naive and stupid to say that nothing else works. They do work. It just depends on who you are, the risk tolerance, what you want to get out of it, and so on and so forth. They're the main misconceptions that I get. I think so often, and I suppose you kind of have to deal with it, we work in a very opinionated industry. You know, property is very personal to people. We all live in one. And for a lot of people, most of their net worth is tied up in property. So of course you're going to have a strong opinion about it. But with all due respect, is a lot of these opinions come from individuals that haven't invested in property. They don't walk that path. Until you do it, and you've done it on more than one occasion, then let's have an open conversation about it. But unless you haven't, then again it's just fluff. It's hot. It's noise. And so I think this is. These are misconceptions that we typically hear about. And again, look, everyone's entitled to their opinion. It's their money at the end of the day. You know, who am I to say you're wrong and I'm right? You know, my opinions are my opinions. But I'd like to say that our opinions as a firm are based on experience, data, seeing. You know, when you're on the ground and you're doing something day in, day out for many, many years, doesn't necessarily make you an expert, because there are a lot of people that have been doing something for double the length of time that are still questionable. It's about the quality of that experience, and actually knowing that you've walked the path that you're promoting, rather than it just being a job. And I think that's
massively important. I think that's something that when we speak to investors, we try to relay that point, is the fact of, would you go and take advice off of someone who hasn't done what you're looking to then do? I think it's crazy.
Well, we had the one I'm thinking of, and again, this is a big misconception. We had a client, new investor, speak to a mortgage broker about an investment, and the mortgage broker just said, "Oh, what happens if you don't rent it out? What happens if there's no demand? What happens in void periods?" And I said to Matt, you need to ask that client to ask the mortgage broker if they actually own a property themselves, because these sort of things they're saying is, well, one, that just comes with property anyway, but I guarantee that broker, which again, if you're taking advice from a broker, you wouldn't even think to ask them the question when you're looking at a buy-to-let, because you would assume with their status, naively, that, they must own property or they must know what they're talking about. But that broker did not own a property and did not know what they were talking about. They didn't own a property investment.
They're quite novice questions to be asking.
And I said, like, for that client to take the advice from that, when Matt owns property, I own property, you know, we're giving you our direct experience. And that misconception there, that the client actually didn't go on to buy in the end because they were worried about void periods and all the data we gave them.
So you're never going to
sway their mind.
worrying about those things.
No,
That's right.
because they were convinced by this broker who'd never owned a property, let alone investment property in their life. So you just have to be careful. And I think that's a great point that you touched on there, like who you're taking advice from. If they've got the experience, definitely listen to it. Doesn't mean, again, you have to accept it or take it as the exact truth.
And doesn't mean they're right.
Yeah, it doesn't mean they're right, as you said. But, you know, you'll be more inclined to take advice from someone who's actually been there and done it than someone who hasn't.
Agreed. And you can believe your own misconception. That's fine. But our biggest thing is do something.
Yeah.
Do something. Don't just sit there, because the worst that you see is investors that are so caught up in pointing the finger saying that's bad. It's so easy. We live in a culture where it's so easy to comment and slate.
Yeah.
Especially in England.
But do something. If it's not property, do something else.
Yeah.
But you'll find that most of the time it's not something else, and it's just constantly sitting on that fence. And before you know it, I think a lot of the times what people don't realise, and I come from a culture that actually was more this, is that you get to the point of retirement assuming that you're going to retire and live a comfortable life, but you know, most of the time you're either unwell or you haven't financially planned properly, so you're in a worse position when you actually need to sort of rest and relax. So do something, plan, do it in advance. You know, if you've got some time on your side, look into these things, but you've got to take action, whatever it is, whether it is property, whether it is new build, whether it's second hand, whether it's an HMO, whether it isn't property, whether it's a stock market. So I think that's the main theme, other than there are misconceptions. And I think it's good to have those misconceptions because that kind of shows that you're curious, and curiosity is important. You've got to ask questions. You have to ask questions when it's your money. Don't just sort of freely give money away. But yeah, it's an interesting time, and you know, ultimately all we can do is promote what we have as a product and a service, and if it works for someone, it great, and if it doesn't, we'll also let them know. I think that's worth telling as well.
So then, last question, what would be the one golden bit of advice you'd give to a new investor looking to enter the buy-to-let market?
Have a contingency.
Yep.
That would be my thing.
Yeah.
Have reserve.
Yeah.
And the second part to that will be, don't cheapen out.
Yeah.
What I mean by that is that, again, whether you buy through us or you don't, is stop looking at what's the cheapest property that I can buy.
Yeah.
Look at what is the best value property that I can buy. What's the best return I can get on my money? Because so often everyone's like looking at how little can I actually invest, and that's where a lot of the mistakes are made.
Yeah.
Don't invest anything, cheap or not. Make sure it's a viable investment opportunity. That would be my advice. Even if it means waiting and saving up, do that.
Good. I like that.
Yeah, I like that as well.
Right. Before we wrap it up, do you want to let people know, obviously, you've got your podcast, but you've also got your social media, as Matt said, is really, really good for people to follow. So, yeah, do you want to give a plug on those?
Yeah, we're Magna Partners. You can find us on Instagram at Magna Partners, Magna Partners on YouTube. And then if anyone's got any questions or inquiries that who are watching this podcast, then please feel free to reach out.
And your podcast as well?
At Magna Partners.
Yeah?
Yeah, it's on YouTube.
You got some good guests on there as well. So
we've had some good guests. We've had you on there, which is why you're saying it. But yeah, and for us, I think more than anything else, similar to you guys have been running podcasts for years.
Yeah.
And the reason why we did it was simply because of putting a face to the voice. I think in our industry, it's very easy to get sort of shadowed. Yeah. And actually putting that out there has really helped in giving investors a sense of comfort, knowing that we're real.
Yeah, for sure.
That's why we do it.
Good. Thanks for coming on, John.
Thank you for having me.
Yeah, hopefully the listeners got good and great value from this, heard us waffle on as we usually do within the property industry. But no, it's been great having you on, and I'm sure you're going to be on again very, very soon.
Thanks, Tobi.
And we'd love to have you back on for sure. It's been a great conversation. And we'll wrap it up there. Cheers, gents. Thank you.
Thank you.
Bye-bye.
Yeah, bye-bye.